Luke Downey, thanks so much for joining us on Wall Street Unplugged.
It's good to see you, Frank.
All right, so we have really exciting times because we are launching your newsletter to the masses. We launched it to a select group of individuals and subscribers at Curzio Research, but now we're launching it to the masses, and it's the Big Money Report. And I guess let's start there because this is something in this style of newsletter, Big Money Report, something you've been doing for a very long time, almost your entire career, mostly for institutions on the sell side. Let's talk about the Big Money Report. What is it, and why did you choose to, I would say, leave the sell side and focus on mom and pop investors, individual investors who are going to benefit greatly from this product?
It's a great question. I was looking at big money, when I was trading all these big orders, whether it was ETFs or stocks or options. And I just noticed, Frank, that, whichever way these institutions were going, that's kind of, they basically led the market. And so while it's fun to sit there and trade and make your brokerage and your commission and all that type of stuff, what I found myself doing was talking to portfolio managers, talking to traders, trying to understand exactly what made stocks move. And of all the research that I was getting and that I was looking at, and this is, going back to late 2010, 2012, 2013, that type of time, I just thought that there was so much promise by looking at data. And so, me and my former boss, who is now a business partner of mine, we just got our heads together and we said, you know what, we should be trying to track this type of order flow that we were seeing on the desk ultimately. And we built up these cool algorithms and just started to see, could we see the waves of big money? And in fact, we could. And then we honed that process, over time to look at single stocks, look at ETFs, see which way the juice was going. And, at that point, while I was trading there and having a great time, career was literally at highs, I just wanted to follow my heart. This is what I wanted to do. I really wanted to become an analyst, a researcher. I wanted to offer something to people, retail investors, to see the market the way we were seeing it on the trading desk. And so creating algos to look for this type of unusual trading activity. I'm telling you, man, it gives you a lot of insights that you're not really getting on your typical news media outlets. And so that's what it was all about. It was just trying to show people a different way to think about why stocks do what they do.
You know what I love about this product and why I'm so happy that you chose to launch it under our umbrella, Curzio Research, is there's so many investors that miss out on the stocks that you're going to have in this newsletter because it's not a newsletter where you're buying, stocks that are completely out of favor, that are terrible. Usually these are stocks that start seeing huge earnings growth and then they've gone up already. And a lot of times when people want to buy a stock and they're looking at it at 5 and it goes to 10, they're like, shit, I missed it. Oh, I'm out of it. I can't believe it. And next thing you know, that stock is 30, right. 40, 50. And then when you see with the fundamentals, right? Even with people forget, 2003, 4, you're looking at Apple and Netflix, they had 60 to 100 times PEs on them, right? Look where they are now, up tens of thousands of percent, where people are like, I can't touch these things. But your system is showing them how this momentum is gaining, and plus you're seeing big money in there. Let's go into that, because I think when investors get to look at this product, they might say, oh man, you're buying this thing that was up like 100%. But as we've seen with the Netflixes, as we've seen with the Facebooks, as we've seen with a lot of growth stocks, not even the biggest ones. I'm not even cherry picking. If you look at some of the great technology, biotech companies, even regular companies, once they see that growth, it takes off. How do you find out when to get into these names? I mean, you use different systems, use the big money index. Why don't you talk about that? Because I think that's going to be a big question for new investors.
Yeah, definitely. So, I mean, look, we got to go all the way back. When I started trading, this was, my goodness, could be 20 years ago when I started to really dabble in stocks. There were just a couple of things that I understood intuitively. I was a researcher and I would look back and see these charts of the greatest stocks out there. And they had a couple of things in common. One is their charts went up and to the right over time. Okay. And not all stocks did that. It was just very few ones. It was the great ones, right? It's the Amazons of the world. It's the Apples of the world, right? So that was the first thing, is to focus on stocks that are actually going up, right? Because they usually continue to go up. But to really look inside of that chart is you need to figure out what is driving all of that growth. What is driving that stock? And a lot of these companies even though they're in different businesses and they have different profiles, they have the same type of revenue and earnings growth. And so just like what you're talking about, where you see some of these stocks and they have these high PEs, and people don't want to touch them, sometimes they're so early in their life cycle that you have to pay up for that growth. And then what you see is years later, they grow into their PEs, and their PEs might have started at, say, 400, and now they might be down to 80. And then, 3 years from now, their earnings continue to go up and up and up. And then it basically becomes like a utility at some point. And so using the big money indicators and the big money index is really showcasing that third signal that we're looking for. So again, as I just said, you're looking for charts that are going up and to the right over the long term. We're not looking day to day or anything like that. We're looking over the long term. You're looking for companies that have just great fundamentals, and typically those are the ones that are growing their sales year after year. They have a great product. People like what, they offer. They're changing the landscape. They're helping people out. They're making their lives better, whatever. And then that final thing was what I learned whenever I was trading on the trading desk is that some of the best portfolio managers out there that I knew of were buying some of the same stocks, and they were these high growth, high quality stocks. These aren't, dumpsters that are going up. This isn't fool's gold. These are companies that have real businesses. They continue to generate a lot of profits. And I just got to the point where over the years, I was afraid to not invest in them, Frank. I didn't want to miss the boat, And so my whole thing is, look, you may not win every time, but if you just get a few of these stocks, I'm talking about, these are what I call outliers. These are the ones that just can transform your portfolio. You're going to be sitting pretty. So it's a process of really sifting out the garbage and focusing on what I think is going to be the next big winning stocks.
Yeah, and it's amazing that you say that because people look at a portfolio and sometimes they want to look at it as a percentage of winners I have to losers, which is meaningless, right? Because you could have 10 stocks in your portfolio, 9 are losers, you had 25% losses on it. But if you have a Netflix, you just bought probably a new island, right?
Great portfolio.
So, when you look at it that way, and I look at your portfolio now, and for Curzio One members, we have beta versions where we get feedback from them and say what they like, what they don't like. It's great where we tailor our product to our customers, right? That's what it's supposed to be. And I think you have 6 stocks in the portfolio now, 5 are up, but you're going to see these are even your last pick, which is a company that I've never heard of, believe it or not. And it's, I think it was a $20 billion plus
That's
market
good.
cap, a growth name, but there's some of these names that come on your radar. I guess, for me, when I'm looking at this is, how do you look at the big money index and not get that head fake? Because what we don't talk about, a lot of analysts don't talk about, is we've been doing this for a long time. And the reason why we're pretty good at doing it is because we got our ass kicked a couple of times, right? For making mistakes
Sure,
through this process. So how do you know where the big money is coming in? And then when you're talking about big money, you're looking at even the algo trading firms that come right in. I mean, the Renaissances and the Bridgewater. I mean, these $100 billion plus funds that swing money around like crazy. But how do you know when that money's coming in and how it keeps coming in? Because you see that trend. You'll see it like go sideways for 6 months, maybe a year. All of a sudden, you're going to see that big money come in, and that's where you're able to tailor it. But tailor to buy it. So how do you figure out that, hey, this is for real? Big money's coming in, and big money's going to stay. Because it seems like once the Renaissances and the Bridgewaters get in, I feel like they're first and second all the time, maybe 2 Sigma third, but then you see like a massive amount of money pour in after these guys, right? So I guess, how do you avoid the mistakes in this? Because I'm sure there's been some that big money has come in and maybe hasn't gone up, but I guess that's my question. Yeah.
Well, listen, after you've been doing this for a while, you start to focus in on, kind of like a pitcher, right? It's like if you got a great fast pitch, don't focus on your curveball, right? Just really zero in on that fast pitch. And that's what I've been trying to do. And so we're getting a lot of signals that come in every day, right? You're seeing stocks that are going up on these big volumes, and it appears to be buying in the stock, right? And so what I like to do is sift all of those stocks for the fundamental characteristics. So let's go back to, say, January or February. What did we see? We saw a lot of buying in SPACs. Now, listen, I just had been around long enough, and look, there's a lot of people who've been around a lot longer, but I remember trading those things years ago, and they were just roach motels, and so a lot of people were wondering, why are you not recommending SPACs, and why are you not looking at this? Just because I've seen this before, And I don't know how many it was. It may have been like 500 new issues. It was something absolutely just crazy. You couldn't even keep up with all these tickers. And so I was able to weed that process out because I have a history that tells me that chances are you're going to lose money if you buy into these. Now, I could be completely wrong, but that was what I had learned, right? So then you start to think about some of your biggest winners that have come along, right? And so some of the names that I bought years ago were like the Netflixes, the Teslas, still hold those, and a number of other stocks. And just listening and trying to understand what made them so great. And one of my favorite things to do is, during earnings seasons, even right now, is I like to listen to the calls. I like to read about what the company is actually saying about their business, and as far as how is their business? Is it accelerating? Are they on a hot new trend? Are they guiding higher? Are analysts behind the ball? If you can do that, and there's very few companies that are doing that, right? If you can just put those companies, put those together, right? Sift out all the rest, and then really just focus on, is the money continuing to go into those stocks, right? Because a lot of times the big money that continues to show up in these stocks, and that means it's pushing the stock higher day after day, week after week with great fundamentals. If you just focus on those types of companies and they have, forward guidance that continues to be above and beyond what any of the highest analysts were expecting, well, that is a recipe for just finding some superior juice stocks. And so that's what it really comes down to. And so very picky, very choosy. There's a lot of, copycat stocks out there, that are, they're the number two or they're the next best. Let's just focus on the best. Let's focus on the number one.
Now, this system has led you to talk about some of the stocks that's led you to that you still own today, which I think is fascinating, which is awesome, and I'm a little jealous. But just talk about that system, that part of the system, and how it's worked for you in the past personally, because you're investing in some of these names.
So this is going to be like a highlight reel, obviously, but some stocks that I have owned over the years, continue to own, and this might be in personal and managed accounts, but IAC, which is just a great company. They continue to spin out great companies. Match came out of that company. Vimeo was the latest one, which we're actually on right now. That has just been a great company. Netflix, Tesla, Google, Chipotle Mexican Grill, PayPal. There's a lot, Frank. I could be honest. But, what was so great about PayPal is I remember when I first got to Wall Street and MasterCard had come out. I think the market cap was around $8 billion. And I would just read the guidance, how they would just blow it away. And so it was one of those stocks that I just gravitated to, thought it was just an amazing company. So years later, whenever you have a PayPal and you have a Square, which I own both of those, it just reminded me of just how great Visa was and how MasterCard was, that it seemed like a no-brainer to invest just a little bit into those stocks. And so you get a little bit of that muscle memory, and then you start to see some of the guidance, and you see that they are, just innovative. And, what they're doing in crypto, what they're doing with PayPal's doing with Venmo, and what Square's doing, and how they're lending to small businesses. I mean, this is just, it's a hard story to bet against over the long term. And it's got big money. So there you go.
And tell me how, because one of your last picks, you say like there's money flowing into the healthcare sector. So it's not just individual names you're looking at, right? It's kind of sectors where it almost narrows you down because you're seeing, for the week or for the month, hey, a lot of money's pouring into this sector. Let me look at some of these healthcare and look at and see if we could find something here where money's pouring in. I mean, is it seems like it's a top down and also a bottom up system. So top down when you're looking at sectors or even the economy or seeing money flow in, and then bottoms up where you're picking an individual stock. But it seems like this is like everything incorporated, where it's not, hey, this system told me to buy this stock. No, you're listening to conference calls, you said, you're looking at earnings. It's almost like your secret sauce on top of this. But how do you use it to really find what's coming in and out of sectors, which is, I think, is just as important?
Yeah, so each morning we come in and we're looking at thousands of stocks every day, right? And we're trying to see which ones are seeing this big money activity. So that is the sifting process right there. Then from there, we're able to separate it out by sector. And we want to see just, where is the money going today? Where has it been going last week? Where is it going? What's the trend the last month? As an example, what's been going down, what's been getting sold recently has been Chinese stocks. What's been going up recently over the last couple of days has been these mega cap growth, just high quality stocks. pretty thin breath, but those are the names that are leading the indexes. So you're able to see that. You're seeing the wave of money. And then you take all those stocks, you rank them by fundamentals, right? From 1 to 100, effectively. And then you really go into the process. And here's the thing. So we've been looking at this for, close to probably 10 years. What I have found is it's the same stocks over and over, year after year, that continue to rank the highest and see the most big money going into them. So, whereas you're seeing healthcare stocks are going up, it's a lot of the same names that continue to just get that big money, like Intuitive Surgical. It just continues to blow away numbers. It continues to see big money. And then you also see a lot of other companies that are similar, healthcare companies that are very profitable. They have they're instruments companies, they develop some type of machine. It's all the same. And you just see that the big money just kind of piles into sectors. Maybe they're going into energy one day, they're going out of growth one day, they're going into small caps, all of that stuff. And you kind of get to see the narrative, right? So that's like the big picture of what's going on. And then inside of that is to really hone in on, where are the outlier stocks? Like, where are the best ones? You see them, they come on your radar. You start to see that big money day after day. I just go in and look under the hood and just try to understand the business. What's their guidance? Are they making money? And then every now and then, it's like a slow, fat pitch comes along that you just want to take a swing at.
And I mentioned this earlier, and I can't stress this enough, because even for myself, sometimes when I'm looking at a stock, I'm like, wow, and you just get so busy. I'm like, wow, I just saw the call, listen to the conference call, that's really interesting. And next thing I know, it'll go up like 25% in 2 weeks. I'm like, shit. A lot of times you think you miss it, but when you're looking over the year, this company, it's just getting started. How do you convince investors? Because it's easy on the institutional level, right? It's just, hey, money flowing in and out, this is our system, whatever. But convincing people to buy a stock that's already up, when they see the results and they read your system, sign up to your newsletter, they're going to understand it. But you can explain it now, because that, I think, is the biggest challenge for investors. I just feel like so many investors say, oh, I missed it. I was going to buy this and I missed it. And those are the same stocks that are up 2, 3, 4, 500% over the next 2-3 years. Is it something that you have to trigger with them? Is it a trust issue? It's because it's almost like we're looking at something that's a blue wall, but you try to say, hey, you know what? You got to look beyond that. And it's like, I just feel like investors can't look beyond that sometimes. I think it's a tough task, but bringing this to individual investors, I guess, is it, how do you explain it to them to say, hey, listen, just trust me, this is the system, this has been working, when they're going to be buying stocks that are very good names, quality names, but they're probably well off their highs. And, again, those are the stocks that tend to go high, especially in this market with zero interest rates that staying here forever, more money flooding the market infrastructure. Perfect conditions for these large cap growth stocks to continue to grow and grow and grow.
Sure. No, a lot of people, they get into investing and listen, when I started, I wanted to get a good deal too. It's just like whenever you go to buy a car, well, not now, because there are no cars, but typically when you go to buy a car, you want to haggle, you want to like, hey, can I get a discount? It doesn't work that way in the stock market. The best companies out there, the Fifth Avenue real estate of stocks rarely comes on sale, just because these are the dominant companies. These are the ones that are changing the world. And I think a lot of new investors, they either have to learn that or they get out of investing. And so the message that I try to teach people is, always have a message of teaching, by the way, just really saying, look, there's a reason Apple continues to go up year after year after year, decade after decade. Very rarely are there sell-offs. And then when they do, it doesn't last that long. And especially we're seeing that in this market since the pandemic, even including the pandemic, things just go straight up, and it's the same stocks that keep going up, so the big money is just gravitating to a lot of the same players. When big portfolio managers want to get risk on, typically they do it the way they always do. They go buy a certain sleeve of stocks, usually the high quality ones, right? And that's how they do it. So, I have always found that, if you're looking at the bottom of the barrel, you're going to get bottom of the barrel returns. But, if you're really trying to look for the best quality of anything, the top shelf, you are just going to have to pay up for it. And these companies, they will eventually grow into their PEs, right? They will eventually become utilities. They'll probably pay a dividend. And I think it takes a while for new investors to understand that, if you're trying to find, the next Amazon, if you would have bought it at any point, basically over the last 15, 20 years, and if you would have held it at some point, you would have made a lot of money, And so if you can kind of show people that, that is the playbook, that is what has worked in the past, it's probably going to work in the future. Usually they come around.
Now, take us through someone who's just subscribed to your newsletter. What are they going to see? So it's, the pick, you have a companion report, which you write. I know you're going to have a stop loss for each company, which limits your risk, and a buy up to price, right? But talk about, what they get, because I think people will want to see that, even though, there's a money back guarantee. You can see it and cancel if you want. All of our product, our front end products have that, because, we want to be open and upfront, because we have really good stuff. And when you see it, usually people subscribe long term. So, but what are they going to see as soon as they get in there? Because I know there's also a page where you teach them, your system, and they have, a whole full report on it. But also, what about the pick specifically, right? Because everybody wants to get the pick. And when they get the pick, go through that process. I think it's going to be pretty cool.
Sure. So basically, it's going to be 4 parts. So you come in and I try to talk about what's in the news, what's the headlines, right? The headlines du jour. So as an example, right, we have a new pick that's coming out tonight. And so I go in and I start talking about the headlines, right? So what are the worries that investors are faced with, right? Right now it's inflation, it's interest rates, the Delta variant. And then I try to put some type of perspective in there, trying to see if I'm worried about that, if I'm not worried about that. And then I will talk about the big money. Okay. I'll talk about does all of this fear, all of this anxiety, does it fit the narrative of money going in and out of stocks? And usually it doesn't. Sometimes it does, but as of right now, it really hasn't. And then we start to talk about things that are coming up, right? So it's the summer, right? It gets a little bumpy. You got a lot of your traders, they're out at the Hamptons, they're sipping rosé. They're not sitting here, trading their stocks. And so for that, we need to expect a little bit of volatility, right? You have hurricane season that comes in the summer. Same thing happens for stocks. So you kind of want to give everybody a little bit of a heads up of what to expect, right? And then also back that up by data. So then we go through some really cool data and talk about, where's the money flowing, what sectors, what's the big money index doing, which is basically an indicator that is looking for if money's going in and out of stocks, because you want to be on the right side of that on the short term. And then finally, we will come up with our narrative, like what's the outlook, for the next month, right? Before I do another pick. And then we get into the stock pick, and I will talk about the story a little bit, just so we can familiarize ourselves with the story, talk about why this is interesting, why this is unique, how it came on my radar. Then I will usually talk about the fundamentals and talk about prior guidance, prior numbers, which way they're trending, why I think analysts are behind the ball here, and basically talk about the long-term narrative here. So again, we're not going to be looking for stocks to hold for a month. We're going to be looking for like a year plus. If you want to make big money, that's the way I found to do it. It's not day trading. Then what we're going to do is we're actually going to have that picture and then actually see, does the big money actually line up with that? We're going to look at some really cool, unique charts against that stock to figure out, is big money going into that stock? Is it a high quality stock? Does it rank really high? What's the market cap? What's the sales growth? All that type of stuff. And then finally, we'll have this buy up to price. By the end of the video, hopefully you're pretty bullish, because I'm not a bearish guy. Stocks, they just go up. The great ones do. And then finally, we're going to go over the portfolio, and we're going to talk about which ones are kicking major butt, which ones are not. Right now, just about all of them are doing really well. So, we'll do a little cheerleading, and then that's it.
You said something under your breath there, which I don't think people caught, because if everything that you talked about, if you're reading that in a 12-page report, could be a little tough. What I love about this, and what I'm trying to get all my editors to do, and it's very difficult, right, is do video. When you do video first, you see the passion behind each pick. Then you get educated. Then you share your screen, and people see exactly what you're looking at, because we all know, we've been in this business for a while, been in this business all my life, basically, is, people are going to buy stocks outside of your newsletter, right? They're going to get tips from wherever, and they could use these tools. So the educational component, but the video, it's tough, because you have to have personality. You have to be good on camera. And I have to tell you, thus far, getting very, very positive reviews. I feel like you love the camera. You like being on. I like being on as well. It seems to me, it's real, right? You really don't know who's writing, and even if they are writing or they're not writing, but just to see it and educate and see the passion behind it and the reasons why you're buying it. I mean, how does that feel? Because I know that's a little bit of a change of pace, but as soon as we said it, you're like, no, I definitely want to do video. This is great. And every single pick so far has been a video pick, and going forward, it's going to be video too.
I find that it's easy. I mean, you sit there and, whenever you're writing, something happens. You could get a block that, you need to say something a certain way. But when you do it in video, there's things that you can do. There's your mannerisms that can tell you, like, you can tell when I'm excited about a stock. All right. Like, like the seeds of greatness are in this stock. I'm going to be, getting super excited. If it's something I don't believe in, there's just no way that I'm going to be able to, tell you a story that I truly don't believe in. So I think video really helps the user, the consumer really understand your process. They understand your personality. They start to understand what it is that you're doing. And then hopefully they can start to do some of this stuff on their own, right? Because you can give people fish, but, teaching them to fish, I think, is really the end goal here. And so, and then I think it's easy to leave a response too, right? So, if you ask people, hey, what do you think about this? And, send me some feedback. Do you like it? Do you hate it? Whatever. I feel like if, they're looking at your mug, it's a little bit easier than, like you said, anybody could write print. We could slap our name on it, but a video, you can't fake that.
No, you can't fake that at all. And yeah, that's well said with video, which is really, really cool. So, and by the way, guys, if you want to see this is on our Curzio Research YouTube page, video, but a lot of people do listen to iTunes, just listen to the audio, but we tape all of our interviews, tape all of our podcasts now, which is cool. I guess last thing here, which everybody loves, is, maybe some sectors. I don't want you to really give anything away in the portfolio, or some stocks maybe that you're looking into earnings season that hit your list, and it might be real difficult to buy something, a week before earnings, like, we saw UPS, right? I mean, just come out, you're like, wow, UPS, and, delivering products like crazy, everything's great. And then, they kind of said, well, we're not sure about the guidance, which I think we're going to see a lot in this quarter because supply chain issues is hard, right? So, and that company got nailed. So what are maybe some of the things that you're looking at, or maybe through earnings season, or even if it's a sector that you're seeing money start to flow into, and you're paying attention, because like you and I, we really focus on earnings season, and we're right in the heart of it, especially next 3 weeks. We're going to see tons and tons, hundreds and hundreds of companies S&P 500 report.
Yeah, no, I think there's two places that I really like. And the first one is going to be medical devices. There's a few companies out there. It's the ones that are growing their sales and their earnings. And a lot of them have already reported, and the numbers have just been so spectacular. I think that that's a trend that you can bet on, right? It's a healthcare, proxy. Are people going to continue to get operations and do different things in their body? Maybe there's some that help in a number of ways. I don't want to if I start talking about some of the specifics of these companies, you'll probably know, because there's very few that do what I'm thinking about. But I would look at medical devices. They're really hot right now. The healthcare sector is looking really good. Also, you can look at some of these companies. They're dividend growth companies. Love dividends, man. That's the bonus level of investing. Semiconductors, which, we're writing a column every single week that's on your website that comes out, I believe, on Mondays. Unless they change that, but it's usually on Mondays. Semiconductors have been really hot, especially with the supply chain issues. There are a couple of big time winners inside of that group. A number of them are going to continue to be reporting over the next couple of weeks. I think that is going to be some of the biggest winners out there. And, if you could look back and think about NVIDIA, years ago, it was such a big money magnet. It continues to be, but there are going to be other players like that are going to most likely have the same type of profile on a return basis going forward. So that's where I would be.
All right, man. So listen, we're going to leave it there because I can keep going and going and going, right? So, but, just picking your mind, talking stocks with you all the time. And Luke came down here, we met in person, and really great time. And, you met the whole team, and we're really excited to launch this thing. And I'm excited you chose us. That means a lot. I like original products. This is original. You're not going to find things like this throughout our news. We have small cap newsletters that focus on growth, but not what you're focusing on, where I think a lot of mom and pop investors miss these names because they just feel like, hey, they're late to the party. I can't buy Microsoft at $250 and now it's $370, right? So, these things keep going higher and higher, but, excited to launch this thing, guys. This is a newsletter. We made it affordable for everyone. It's under $100 a year, and there is a money-back guarantee, which, again, you can look at it and say, wow, these guys are full of shit and get rid of it, which I know is not going to be the case, but, yeah, if you give it a try, it is unique. It is an awesome letter, and I'm really excited to launch it. I'm glad you chose us to launch it. To launch your Curzio research, man. So looking forward to a relationship. Looking forward to getting some subscribers. Yeah. And again, officially launches today, and really, really great stuff, Luke. I really appreciate coming on board, babe.
Yeah, no, I'm excited to work with the team. I like everybody. I like your real raw attitude when it comes to stocks and all that type of stuff. So, whatever the price point is, I still think it's too cheap for the value that you get. But again, we'll let the consumer. If I had this when I was starting out, who knows where I'd be today, Frank? But yeah, it's going to be a lot of passion. It's going to be a lot of work, and we're going to be focused on quality. And at the end of the day, that's where the winners are. So.
And I'm not going to lie here either, because you are going to come out with a special newsletter. It's going to focus on options using the same strategy that we will be charging a lot more money for, more specialized. But, that's coming out in a couple months. But, once you see what he's all about and this system, how to really take advantage of it, it's going to be really, really cool. So excited to launch that Big Money Report first. And thanks for coming on, man. I'll talk to you soon.
Thanks, Frank. Have a good one.